G'day taxpayers, some mixed news on the economy from the confidence and sentiment surveys that are out there. In no particular order, we had consumer sentiment up again from our friends at Westpac, so up 4%, so those rate cuts are really kicking in. So consumers, no surprises, do like interest rate cuts, and so we've had that increase. But that said, the index is still negative. There are still more pessimists than optimists, which says to me that we need further rate cuts to get that optimistic level back so people are actually ramping up their spending in a sustained way, which of course is important. It's not just Black Friday sales or anything like that that's giving a temporary boost to economic activity. On the NAB survey of business confidence, conditions were a small positive, but still well down on where they were a year, 18 months ago. Business confidence has gone back into negative territory, and of course these numbers predate what's been happening in the last little while. The other negative indicators were profits, forward orders, final product prices, so things that are really important to the business sector are all negative or very weak, and the final product prices are back to where they were pre-pandemic. So that says to me as a guide on inflation that there are downside risks to an already low inflation rate. So the business sector is telling us that things aren't so great at the moment. We've also got a few sort of what I'd call in the groove numbers. They're weaker than a year, 18 months ago, but they're not catastrophic, but nor are they strong. And that's things like labour costs. Yeah, so we know wages growth's around about 3.25%, probably going to be sustained at that level for the next couple of quarters. Trading conditions sort of neutral, purchase costs are sort of neutral, so we haven't really seen any indicators there of a rebound that would be at all indicative of stronger growth or indeed higher inflation. So throw all that into the mix. 1 April, the RBA meets again. The only debate that I think should be on the table is whether they cut 25 or 50 basis points. Depends on how Trump screws things up over the next few weeks, whether they go 50. And also we do have the next monthly labour force and inflation numbers coming out before then too. But these numbers are entirely consistent with a rate cut on the 1st of April.